Hey, everybody, welcome back to the May 7th edition of Money and Politics. And as I record this, we just had Brian Foote deliver his investor call for May 7, well anticipated. And let's get your feedback. I'm taping this, like I say, about an hour after. I'm looking at some of the responses on Twitter. But if you would, give me your feedback when we post this. You can give it on the video. You can give it on Twitter. Were you happy with what you hear? This was anticipated for a variety of reasons, some of which was we wanted to hear what we didn't know. We wanted to hear about the B shares. And I can't say if you were satisfied, so you got to tell me that. Were you excited by what you heard, by the plans, by how Brian Foote presented it? Let me know on that. And as we, before we get into the actual call, we looked today at the shares. We were kind of treading water here with the big news event coming after the market, up 3.82% to close just under $1.50. We were at times a little higher than that during the day, but that's where we are now. Where we go on Monday, who knows? But that said, let's take a look. We had Brian Foote didn't waste too much time getting to the issue of the shares and were they going to be diluted. So let me point out, because when he would talk about this, he would talk about some things. I took out of this bite I'm going to have that runs 49 seconds. I took out some of the side comments here and there just to make it 49 seconds instead of 2 minutes. But I left in there the meat of the bone. But I just want to let you know I did edit this. So on the B shares issues, let's listen to what Brian Foote had to say.
The preferred Bs issued in the reverse merger, 45% of those are held by me, so those will just take those out of the float through 2022. 16.5% of our shares, preferred B shares, are held by officers and directors, so people like Michelle, Karen, Adam, Jeff, people who have been at this for over a year at their own cost, putting in their own money, grinding on the business. They also will be subject to strict selling limits on their shares, so it's not like they can just walk in December and start flooding the market. These are people who have been at this a long time at their own cost and their own hours. And then lastly, we have about 38% of the Humbl shareholders are folks who are angel investor groups, people who have invested in us to build this business over time.
Okay, so you heard it there. He is, Brian Foote, trying to make every effort that he can to limit the dilution. He also noted, as you heard, that those who have 16.5% working for the company are also going to have some restrictions. They're not necessarily along the same line to what Foote is saying on his own shares. And that we have then the 38% shares, 38%, I should say, of the company is owned by those who had invested in his company before it went public, the venture capitalists. So with that, you're going to have to say, did you hear what you wanted to hear? I know a lot of you wanted to hear that all of the people who had the B shares were going to have their 10,000 to 1 reverted to 2,500. He didn't say that. People were saying they wanted to have it reverted just like when they did the reverse split. It might be, I'm not trying to make excuses here for Mr. Foote or explain away, but I wish he would have addressed it. It might be that he can't, perhaps financially, from a legal standpoint, reduce the ownership stake that the venture capitalists have, or for that matter, maybe if he had pre-planned or pre-promised, I said, the 16.5% to managers and others, he might not have been able to do that either. But I am interested in how you all think as far as, did he address the preferred share issue to your satisfaction? And again, obviously I can't say that for you. So You can, again, bring it back to make a comment if you want, where you can, on Twitter, or you can send me an email, which I didn't show you before. And let's see if I can bring that up. There we are, moneyandpoliticsnow@gmail. Okay, so that said, one of the things I thought was interesting, there was a number of things I thought interesting, which is why I'm bringing up these bites that I selected, he started getting in more into some of the revenues and where they want to go with the NFTs. Now, this lasts just about a minute, but I thought what was especially interesting, Top Shot he talks about are selling $350 million a month, I believe I have that right, of NFTs on their site. So he's talking about some of the revenues that could be coming in from the NFTs. Let's listen.
We are driving revenues across all three of our business lines. So subscription revenues through the ETXs, transaction revenues, ticketing, vendors, and NFTs. I really am. If you look at Top Shots in the NBA doing $350 million a month on NFTs, there are hundreds of professional sports leagues around the world. We are having incredibly compelling discussions in key verticals of NFTs: sports, gaming, photography, entertainment, previous catalogs. You'll see catalogs of music and film that I believe will have as good or better second lives at the box office than they did previously, just by getting chopped up into really meaningful NFTs that the collector or the trader or the investor or the customer can buy, sell, list, collect. We're going to do some really, really thoughtful, creative things with the repurposing of NFTs that I believe will give catalogs of content a whole second life.
So did he excite you with that, or did you want to hear more? Did he, as he was talking the revenues, he never really said in the totality how much revenue are they having coming in. He did say that they were kind of being frugal. I'm putting some words in his mouth there, but I think that was his intention, to say that they're being frugal on their cash burn basis, and that he didn't really address, like, tell us how many people had subscribed to the ETXs. I would have liked to have heard that. It's maybe a little early. I don't know. It's been about, 3 weeks or so since the ETXs came to the United States. And one thing he did say, and I'm not going to have a bite on everything. I got 4 bites here. But he had a lot of "we're looking to do," "we want to do," which is perhaps understandable given the nature of the fact that it is a startup. But that was a lot still of projections. And he did say we want to have a simpler methodology on the app for buying ETXs. We want to get that down to one click, he said. We want to have it, what is the one app, Hot or Not, where you want to, he goes, we want to be able to have it to where you can just swipe left or swipe right relative to the ETXs. And I thought it was interesting that he said some of the apps are going to be modular, so that the look and feel and functionality of the app in the United States would be different from, say, the app in Chile or perhaps the app in Asia. So I think in that sense, he might be looking at the cultural differences, among other things. So we get up to one of the things talking about, which I always wanted to hear, and I think you all do too, to the extent that we're making money, how are we doing? And the real nice piece of information, and what I say is meat on the bone here, where we got a fact we can hang our hat on the revenues, had to do with what Tickery is doing. Let's listen to that.
Tickery side, they have already achieved one of their post-COVID goals, which was to achieve 1 million in gross ticket sales over the last 30 days rolling period. Sorry for that typo there. In gross ticket sales over the last 30-day rolling period, aligning well across mobile pay and NFTs, a 33% increase in ticketing sales.
So $1 million over a 30-day period for Tickery, and he said that their 33% increase in sales over the previous 30-day period, approaching pre-COVID levels, with many of the venues and tours still set to ramp up over the coming months. So that's all very good. Revenue's increasing month over month. We got that at least. And I had thought that the Tickery is obviously one of the real sweet spots for the company. The NFTs might be, and of course, as probably a lot of you know, earlier in the day, they announced that they had made another acquisition. They did a deal for about $8.5 million. I think there was $7.5 million plus in stock, $500,000 in cash with a promissory note of another $500,000. So about $8.5 million. Now, of course, Monster, who they were buying, the creative studio out in the LA area, I believe, are going to be used for making and the creative, I think for a variety of things, but for these NFTs. That's where Brian Foote, I think, sees a lot of the revenues that are coming out. And as we noted earlier, when we said Top Shot was doing $350 million a month. So not only did Brian get the Monster acquisition that he announced earlier today, but also he said they're having a lot of very positive conversations with across different different verticals. And by that I mean where he might be talking in the sports realm, he might be talking in the music realm, he might be talking in the video, the movie industry, or television even perhaps. So so there you go. You know, let's listen on that. This is a small bite, but he just kind of talks a little bit about Monster.
They are a hardcore packaging company for creative and NFTs and ticketing, and we're just thrilled to sit in front of high-profile companies.
So Humbl continues to grow in terms of staffing. They continue to grow in terms of acquisitions. Tickeri, now Monster. This is a growing company. We're going to have to wait until probably well, I was going to say July, but maybe we'll get in June. We may, in the investor call, get some numbers more. We're starting for the first time to hear some revenue numbers. But folks, we'll have to see. Is the excitement going to come up? I just think that when you're going into a startup company, you're going to have to be a bit patient with the growth of the company, with the growth of the revenues. But they are laying the foundation, it seems, and following what they're talk about doing. And interesting, too, by the way, Brian Foote, before I close out here, not to go too long, I think I'll do a follow-up on this perhaps over the weekend. We'll get some of your comments. Maybe we'll refer to some of those. So, you know, go ahead and, again, leave it under either the video on YouTube or send it to me on Twitter or possibly on Gmail. But that said, what was also interesting as he was closing out, he was saying that the last weekend in September, and this is not yet nailed down, in Nashville, last weekend of September in Nashville, he was talking about having some shareholder get-togethers and maybe even that a group of Humbl shareholders could go to a football game together or so. So that's, I thought, kind of interesting that he brought that up. All right, folks, big news. We'll have to see how this plays. I am not going to say what you think. I can't. You're going to have to tell me, are you happy with it? Are you happy with the vision? Are you happy with the execution thus far? This is what I've always said. It's not about the stock price right now. It's about the execution. And by the way, before I close out, on the app, Brian Foote did say that he understands that the app is not where they want it and that they're going to continue to make refinements. And don't forget that they just had, about 15 new hires, a lot of talented people coming in, and also to address some of those very issues, certainly on the app and in marketing, and as we now see people in the creative end working with Monster. All right, folks, I will let you go, but I hope you have a good Friday night. Hope you have a good weekend. Again, let me know if you want to give this a thumbs up, do that. If you want to share it, feel free. I will later post the entire call that Brian had that ran close to 50 minutes. In the meantime, we will see you later.